I'm delighted to be sitting with a very esteemed panel. I will let them all introduce themselves shortly. But I am Emma Joyce. I head up EMEA for GBBC. We're going to be talking about the evolution of financial services infrastructure, which is at the heart of the digital transformation of the global economy. And so this panel today is titled Building the Backbone of Financial Infrastructure. So if I could ask the panelists to introduce themselves, please, starting with Eric.
Sure. Thank you, Emma. My name is Eric van Miltenburg. I'm with a company called Ripple and have been there for a little over 8 years now, and during that time I've held a variety of positions ranging from business development, corporate development, marketing. Right now I head up something called strategic initiatives, get involved with some of the bigger, meatier, complex adventures that we're on, and I'll stop there.
Hi everyone, I'm Yuval Rooz. I'm the co-founder and CEO of Digital Asset. We have created Canton Network, which is the only public chain with privacy capabilities.
Morning everyone, Tom Duff Gordon. I'm at Coinbase. I'm the VP of International Policy. I've been at Coinbase for 3 years, and I look after all the policy work we do outside the US. So delighted to be here.
Thank you, and thanks for having us. Really, really nice. First time in Davos, so suitably nervous. James Harris, I am Chief Commercial Officer from Zodia Custody. We are a digital asset custodian, regulated globally. We have offices throughout the world. We have 2 verticals. We provide custody to our clients, but also provide technology infrastructure to banks like Standard Chartered and SBI. Really looking forward to this topic. Go easy, man, okay?
There's absolutely no need to be nervous, but I am going to come to you first, James. How would you describe the current state of financial services infrastructure, especially when it's supporting the growth of digital assets and tokenized markets?
So in a word, I'd say it's fragmented, to use 3. Fragmented and maturing, which is good. I think I've been in digital assets for quite some time, so seeing it where it is now is light years from where we started. But I think that the reason it's so fragmented is the way the origins of how crypto started out. It started out very much as a retail phenomenon, which then had crypto-native providers such as Coinbase and other names, in a world where the TradFi firms had just had no interest. And so we've been creating platforms, solving problems for people, but TradFi now is taking notice. And now they're looking at this going like, oh, wow, okay, we can solve these problems too. So what you get is this sort of Cambrian explosion, which the term gets used a lot, but of these platforms that are all doing exactly the same thing, right? Slightly different protocols, slightly different standards, and all trying to gain critical mass. And I think that that's been a problem that we're now trying to solve together. So folks like us, folks like Coinbase, folks like Ripple, we actually have to solve for both situations, insofar as we have to solve for everyone doing their own thing because we have to be interoperable, but we also have to try and make sure that we can help the TradFi players, right? And so we don't get to pick the winners. There will be winners that emerge. We can't really see them yet, so we have to solve for everything and be interoperable. So that's the kind of landscape that we're navigating, and it's hard. It has its challenges.
Who wants to jump in next?
Are we going down the line?
If you want to.
Why not? Why not? Look, I definitely agree. The current financial services system is fragmented, right? I was just looking at a stat today. There are 41 different trading venues and exchanges, like in Europe, just alone, okay? Wow. And, we've been trying to think about banking union and capital markets union, all those things for like 10 years. I was in TradFi for 15 years before Coinbase, and so a lot of these arguments have been going round and round. But at Coinbase, we think now is the time for an update, and we think that we now have the technology to do that. I mean, cross-border payments still, the kind of remittances kind of average cost is still around 6.35%, something like that, which is incredibly high. Still takes kind of 1 day or 2 days to settle capital market transactions. Banks are striving by 2030 to try and settle cross-border transactions, 75% of them within 1 hour. And yet we have technology that can effectively, use Base, which is our layer 2 on Ethereum. We can send money instantaneously across the world for within kind of 1 second or instantaneously for less than 1 cent. So we have that kind of technology now to kind of move forward. So it's kind of inefficient, it's slow, it's costly, it's in need of an update. But I guess my other observation, it's fragmented as well. The other observation is, I think we're at the very early stages of the kind of development. if you think about RWAs and how much we've actually tokenized and we've gone on, I think it's like 10 billion, 13 billion, something like that.
Not including stablecoins, which I
not including stablecoins, which is 200 billion. But I mean, that is a tiny proportion of kind of RWA writ large, right? If you think of the 100 trillion plus of kind of, debt securities and equity securities. So I think, lots of problems that we've identified very early stage, and we are just super excited for what this year and the next kind of 2 or 3 years will bring in terms of us being able to bring more of that legacy infrastructure onto the new rails.
Yeah, I agree. The ecosystem is fragmented, but maybe to add to some of the comments that were made so far is I think that the industry, because it started from a retail point of view, some of the enterprise features just didn't matter, right? Retail are okay on Venmo to send money and for everybody to see who sends what. I think that if you talk to a global publicly traded company, they wouldn't be okay for everyone to see their payments. So where we started with Canton is really saying we want to have a fully public chain, but that you could actually do transactions with privacy. And tomorrow we will announce actually a very big issuer that will issue assets on chain purely for collateral mobility. So we're talking about collateral. Collateral, in my opinion, very similar to stable coins, is probably the killer app for public chains because it's fairly not complicated. It's a not complicated use case, but it could have dramatic effect on TradFi. So we announced last week with QCP that we're going to start with on-chain crypto derivatives margin management, and you're going to see a good number of crypto native players that are coming in, but you're also going to see some very large TradFi companies that are coming in because at the end of the day, crypto derivatives trading is very similar to index option trading, to interest rate swaps. It's all the same, just on different underlying asset classes. And I think that that alone can, propel stable coins and on-chain assets to trillions of dollars. So I'm very excited about what is going to happen this year, especially with the change of administration in the US. But I think that it's still important to understand that these enterprise clients, their requirements, and privacy is just one example, are not going to change as a result of the change in administration.
Yes, well, I don't disagree with the... Is this also off?
Hello?
Oh.
Okay, that's working.
Hello. Nothing that I'll say is in any way contrary to what the panelists say, but at Ripple, we've kind of been on this journey of providing infrastructure, digital asset infrastructure for enterprises, for financial institutions for almost a decade now. I mean, our insertion point was with cross-border payments. We have hundreds of financial institution customers around the world. And it's been a journey, right? Initially, I remember being in meetings 4, 5, 6 years ago with a large bank where their team would be with the executive team, and their team would prep us and say, don't say Bitcoin, don't say digital asset, they'll kick you out. And to see the evolution has been dramatic. Initially, we really were providing infrastructure in the form of a messaging product, kind of a swift update or replacement. Since then, we work with our customers, we make sure we're compliant. I think that's obviously a critical part of the infrastructure that we need to keep very much top of mind. And we move at their pace. Sometimes that's very frustrating when you're dealing with large traditional financial institutions, but the speed at which they want to operate and iterate and innovate is increasing dramatically. And we started with cross-border payments. Another core piece of infrastructure, obviously, is custody. We made an acquisition a little over a year ago, a company called Medico in Switzerland that is now that is Ripple Custody, that is serving some of the largest banks and providing that incredibly important piece of infrastructure. And then, per the comments before, I mean, this next wave of tokenization, and of course, tokenization in and of itself is great, and there's efficiencies, but once you tokenize something, you have to do something with it. You have to be able to store it, come in a compliant, safe way. You have to be able to transact. You have to be able to move value. So it's really putting together, not a piece of the infrastructure, either doing sort of collaborating with others to bring those pieces together in a way that's seamless, and or providing those capabilities organically in-house. And we're, as a company, exploring all of those different approaches.
Okay. Okay, really interesting. Thank you. My next question is about challenges when integrating traditional financial systems with blockchain, and I guess it also ties into, we've spoken about, we're expecting a lot of this year. We've spoken about, institutional adoption and what we're seeing from banks. So I'd be interested to understand what you think the challenges are, but also, how do we overcome them? And is this the year? Because I feel like I've been saying that for possibly about 5 years now. So it'd be interesting to gauge your thoughts on that.
I'm happy, mainly because we've been at it with enterprises for a long time. I think of integration in two ways. One, there's the technical side of things. And when you look at most of the financial ecosystem, it's what I would say batch-based, end-of-day kind of processes. So everybody talks, for example, on money market funds. Most of the fund admin platforms today are a batch. You can kind of create, redeem once a day. So if you want to start thinking about a money market fund to trade flow freely throughout the day, those systems are not really designed for it, which makes it a lot of times challenging to really think about how can you actually integrate, this really advanced technology that does things in real time and still, not have to reinvent the entire financial infrastructure. I'd say that's one side of complexity, but at the end of the day, I think that kind of a technical complexity always has a solution. I actually find that this space had much more challenging from a cultural integration. So when you go and you talk to, like I mentioned, for example, collateral, and I see a lot of times crypto players that they're being asked, so does your collateral have bankruptcy protection? Can you perfect title? And they're like staring at their counterparty like, what are you talking about? And I think that that's something that our industry have done much better in the last few years, is this cultural integration into TradFi of understanding what are Basel requirements, what is title, UCC, all of those type of terms, and coming into regulators and their counterparties or their clients and having that appreciation. Because if you're going to come and you're going to say, we're going to put everything on Ethereum, don't forget, and then the regulator says, but what about the DAO hack? How can you perfect title if people can make transactions disappear? I think that creates challenges for our industry as a whole from an integration perspective, not necessarily in a technical manner.
Thank you. I'm going to actually use the panelists as a microcosm of the difficulties that we face. So we use Metago under the hood. We're very proud partners of Metago, Ripple Custody now. And we're also big fans of what you're building at Canton Network. And I think when you look at some of the problems that Canton Network solves, is this privacy-focused chain where, if you think about a market maker wanting to cover a position or hedge a position, they don't want the world to know that there's a whole ton of assets being moved to support a position because the market will come and break you. So we say, okay, great, we're going to support Canton Network and we're having great conversations with your team. In order to do so, though, there's a few things that need to line up on our side. So first of all, we need to make sure that the coin and protocol can be supported from a technology perspective. So we need to make sure Metago or one of our MPC providers can support it. Then we need to go through all of the KYC AML providers and say, okay, can you surveil that chain? Can we make sure that who's who, and that's all there. And then Coinbase needs to be able to trade some of the coins tokens because we need liquidity, right? So we're looking at this, and all we wanted to do is add support for the Canton Network. So the client's going like, hey, come on, guys, why can't you do this? It's like, well, it's a little complicated. So that writ large is your problem, because you have all of these networks that are emerging. They've all got great value propositions. Some of them, let's face it, kind of do the same thing. But if we can then concentrate value into the things that are emerging, then that's how we'll make this easier. So interoperability, we mentioned this a lot. Compatibility, we mentioned this a lot. They're really hard things to do. And custody sounds like a terribly boring business, but under the hood, it's the most stressful, boring job I've ever had in my life.
I think building a little bit on what you all said on culture, I can't stress enough. I mean, as a company, as we've grown, we've pulled in people from different industries. We've made a big investment in terms of people in policy, compliance, certainly people out of the TradFi world. So as you're going into a larger financial institution, you can speak their language figuratively and literally in some cases. And I kind of want to hit on something, Sandra, you were just talking about in the earlier panel with Dave. people also means getting the people with the right skill set. And some of these are new types of careers, new types of jobs. And Ripple's going back 6 years now. We formed a partnership with universities around the world. We call it the University Blockchain Research Initiative, where we've formed partnerships with 60 schools in about, 30 different countries around the world, really to promote the understanding of crypto, blockchain, and really prepare the next generation of workers for being able to work in this. So while it's nothing we're going to solve overnight, in terms of a dimension of the complexity we face, we have to have the right people with the right skills to be able to bridge the gap between the DeFi world and the TradFi world.
I can be real quick because I agree with a lot of what's been said. I think sometimes there's a perception, maybe to start here, that crypto natives, we don't kind of want TradFi in, or somehow it's a zero-sum game. Like, our view actually is that we want to see more of the banks play a role in here. So we think of things like SAB 121, and we're kind of pro that being kind of reformed. Ultimately, we think this kind of rising tide is going to lift kind of all ships, so we want to see them come in. But we do need clarity on regulation, right? We haven't kind of mentioned it, but it's so important. When we get the market structure bill in the US, clarifying kind of, whether these things are commodities, whether securities, and how they need to be treated, and what kind of intermediaries you need, and CCPs, and the roles of all of those different bits of the market infrastructure, I think is absolutely important for us to figure out how we're going to do that integration. James, you touched on KYC. I think that's also important if we want to see these two worlds come together. For example, we would love to have more people with Coinbase wallets, like self-custody, participating in some of these kind of lending pools and doing lots of cool stuff. I think as we move forward, and maybe this is the year for like decentralized ID and more of these ID type solutions and attestations and credentials that Sandra, you were talking about on the previous panel. Like, we have Coinbase verifications, which we think is cool. That drops an NFT and an attestation in your kind of self-custody wallet, which means that you can then participate in some of these kind of lending pools. And then the TradFi players know that the people in there aren't on the sanctions list, for example. So I think there's a big KYC unlock as part of this integration between the TradFi world and the crypto world.
And I think actually the Overton window has been smashed wide open this weekend with the advent of Trump launching his meme tokens, because that now, from a regulatory perspective, the regulators. But what it means is that, well, meme coins are okay, right? Because what are you going to do? I mean, seriously, what are you going to do now? The president and the first lady have just launched tokens, right? That changes the whole game. So
had to go there.
Had to go there. Yeah.
Had to go there.
Yeah. Well, that's because our clients are already saying, how can you support Trump? Sorry, that's the token, not the man. Yeah.
Well, we have panels on regulation later, so I don't want to touch on it too much. But Tom, as you raised it as a challenge, do you see this year, do you think we will overcome some of the regulatory obstacles that we've had?
Is this the year?
Yeah, I don't know. I don't want to be nailed. It's being recorded. I'm an optimist, right? So I think we will see progress in the US, right? I think there'll be day one EO progress. I think you'll all see that. And then hopefully by the end of the year, we'll have a market structure bill, maybe something on stablecoins. So we're kind of fingers crossed. In the EU, obviously, MiCA's gone live. But look, I think the big thing is that what's happening in the US globally, and my kind of remit is international, I feel like if you don't have a kind of a set of kind of rules on this stuff, you're going to hurry up now more than you ever were before. And if you do have one, you're going to try and capitalize on it, right? Because there's going to be a big kind of like investment kind of movement thinking about, where should we be? So I'm very optimistic that the momentum behind regulation, because of what the US has done, it's going to be globally felt. I mean, I have experience of that traveling through Asia and even Australia, where what they're doing in the US is beginning to reverberate. So
it fans out.
Yeah.
It just fans out.
Yeah. I think, I would agree. Yuval, what role does infrastructure play in ensuring scalability and security for tokenized markets?
Yeah, I think it's kind of very similar to the privacy comment. Is when you start thinking about the scale of crypto markets today, it's a drop in the bucket compared to the volumes that are happening globally. I can't name the entity, but we have started doing sports wagering on-chain, and we start looking at the volumes that those organizations are doing. It actually puts to shame some capital markets, equity markets around the globe. And I think that, to me, that's a critical component, is to be able to show regulators that you could run significant portion of the markets, because a disruption, for example, we're doing about $150 billion of repo every day. And it sounds like a big number when you think about crypto volumes, but actually the daily repo market is about $10.5 trillion every single day. And our goal is to get to $500 billion by the end of this year. But if you actually start looking at some of the issues with the Fed, I think it was like 2 years ago, it was actually a disruption in the repo market, which is how banks meet their capital requirements. So I think that, again, it's back to that cultural understanding that scalability is not just, oh, I can do a lot more volume. It's actually, if the thing goes down, like Solana, you know, sorry, I had to, you know, it could have a significant consequences on things down the road, meeting your capital. And I think that for us as an industry, having that appreciation of scalability, privacy, control, is extremely important as we talk to regulators to give them the comfort. So some of the things we've done before we launched a public network is actually work on a lot of projects that show that the technology scale, whether it's the sports wagering, whether it's the repo, whether it's private equity. And we've done those things now for years at scale. So we actually have quite a significant amount of volume under our belt on some of these kind of mission critical systems.
Amazing, thank you. Eric, what are your thoughts?
Well, I agree. I think using the example of custody, you know, with Ripple Custody, formerly known as Medico, it's working with large institutions and making sure that they can scale. We have tremendous coverage of some of the largest financial institutions in Europe, be it DBS, HSBC, BBVA, Switzerland, and you know they're trusting us to come in, not only provide custody, but allow them to tokenize and pull it together in one package. So scale is going to happen when some of this fragmentation that we talk about it kind of is removed. We almost want this. We almost want this to be kind of boring. It should be really clear. It's not like taking a front seat and you spend half the time you meet with a customer just explaining the technology and why they shouldn't be worried about it, but you're really focusing on the benefits, the real world utility that the solution brings. And without that, it's going to be, you know, it's a slog. And I do feel it's getting better. Again, the amount of inbound requests we're getting to meet with large institutions around tokenization products is just astounding vis-a-vis a year ago. And I think being able to again bring those things together in a very kind of frictionless way is what's really going to allow the real scale to thrive.
And I mean, so that's a big change in a year.
Yeah, absolutely. I mean, I think especially with this, as been referenced, this new administration, even the last several months. I mean, you just look, the crypto market cap is up $1 trillion in the last 6-8 weeks. It's astounding. Now, we'll see what the next 6-8 weeks, 6-8 months brings. But I do feel it's an inflection point, and I think it's poised for significant growth. Now, again, there's estimates of a $16 trillion market cap of tokenized assets by the end of the decade. So there's a long way to go, but I think we're going to see that curve start to steepen.
I just want to real quick add, because I think Eric used the word utility, and I just can't I wanted to double down on it, because I think that if you look at a lot of the activity right now on some of the public network that drove a lot of this really exciting growth are activities that if the market were to take a downturn will be the first to go away. And that's why I think it's extremely important, Coinbase working on payments, tokenization, real world utility. If the S&P 500 goes down even 20%, people will still have to do repo. People will still have to do payments. And I think that that is extremely important for us as an industry, is to create real world utility that is not necessarily as sensitive to market volatility.
Totally agree on that. I want to bring a slightly different angle to how we kind of like scale this. Look, for us, there's a big question out there that came up last year, which is, as we kind of scale out tokenization, are we going to see these kind of open, permissionless kind of like, you know, protocols, and are they going to be the base layer and people are going to build on top of that? Or are we going to see more of these walled garden, these kind of like private permissioned? And, you know, if you read some of the papers from the BIS and from other places, you get the sense that, you know, there's a preference potentially for kind of moving this into kind of private, permissioned, kind of walled gardens. Look, our sense is actually the future, mostly to scale, this is going to be on public, open, permissioned permissionless networks, right? This is going to be better for innovation, it's going to be better for transparency, it's better for competition, better for resiliency, which I think we're going to kind of come on to. But the reality probably is that we'll have a bit of a hybrid, right? And we'll have these kind of neutral kind of like base kind of like protocol networks, we'll have open permissionless kind of like systems, and then you can have private permissioned applications and loops that kind of sit on top. But for us, a big kind of like the policy debate of this year, one of them at least, I think, is this going to be this debate around who's pushing in which directions, and actually allowing the innovation to occur in both of those places, we think is really important.
I'd just like to add, I'm so aligned with you, Tom, on the public blockchain thing. I think we are, by a shareholders' agreement, not allowed to hold assets that are on private permission chains. Now, some chains like yours, you have a private side and you have a public side, right? So that means that we're good. But I think that we fundamentally believe in open networks, open internet, because ultimately that's where all the scale is going to come from. And I think that it's kind of quaint to talk about a spreadsheet, isn't it? Where you trade amongst your friends. I mean, I thought we were past that. So really, we are uncompromisingly bullish on the open internet, on open standards, and that is what we want to support, and that is where we invest our resources. So when it comes to tokenized assets, we note that there are a lot of people that have to come together to make that happen. We can't solve for all those things, primarily for the regulatory piece. If we had all the tickets that we needed to do the whole stack, we'd just be that's all we'd have. We'd have regulatory people. And so I think that we have to choose our battles. Our battle is that we will custody any digital asset as long as it's on a tokenized, on a public rail.
Okay, thank you. Okay, I think this is probably our last question. So Eric, can I ask you what industry can do to guard against cyber threats and systemic failures?
Well, it's a big question. And I mean, I think the first thing is to acknowledge this is an industry. Well, maybe there's several others, but the pace of change and movement, it is rapid. So you always have to be on your toes, and I don't think there's a way to ever 100%, fully protect. I think the other thing to acknowledge is you probably can't do everything by yourself. I think partnerships. There's a lot of companies that have done a lot of great work on different levels or different dimensions of this, whether it's fraud and compliance, whether it's just scalability of networks. We leverage a network called the XRP Ledger. It hasn't gone down in the last 12 years of operation. It's processed 4 million blocks over the course of that period. And so it's looking for those things with a track record and that have demonstrated the ability to survive. Again, that's never going to be perfect, but I think it's just being smart and doing your research in advance.
Any views on it?
Yeah, I think that maybe this is a good place to call out GBBC. At the end of the day, this is software, and software will have vulnerabilities, and best practices, how you do software development, continuous development, continuous testing, all of those things will get easier. There will be tooling that will make it better, but at the end of the day, as we all know, a very, very nice human engineering, and the whole thing will fall apart. And this is where organizations like GBBC that really helps with educating both regulators, companies, and at the end of the day, as a result of that, consumers can really help. I mean, I could tell you a digital asset, most of our effort is actually about educating our employees how not to fall to traps, because again, I think from a software perspective, probably today this technology has all the available tools to build things in a secure, scalable manner. It's really when you fall into, I want to deploy a smart contract into a DeFi protocol too fast because there's a nice opportunity, and then a vulnerability will happen, or again, people hacking, and then their wallets get emptied as a result of that. That's just my.
Thank you.
Yeah, I'll pick up on the kind of dialogue and education piece, because I think that's incredibly important. Like, we've never been hacked, kind of touch wood. But if you're custodying other people's assets, you've got to be, you need to have institutional grade, systems. You need to be thinking about it so much. But we need to have a dialogue with regulators, because it's not the same as custodying kind of traditional assets, right? You're kind of protecting a number. And sometimes regulators will say, well, we kind of want everything to be just in one place, and we want a responsible person and localize it all here, and that's great. but there are real conversations around, well, best practice that you touched on actually is around dispersing key shards, right, across multiple different kind of geographies and time zones, and having kind of really complicated key management, signing systems and all of that. These actually create much better enhanced security, but it's kind of a bit anathema to the way that regulators normally think about regulating stuff, where they want to kind of like see it, touch it, and have responsible people. So I think there's a really important dialogue that has to take place of education going in two directions around best practices for kind of like cyber hack security, particularly around custody and assets.
Thank you. I was going to say a lot of that. Thank you. You absolutely beat me to it. I think, again, of the panelists, we work with two of them, and we keep calling you, but you don't return our calls. But that's okay. I think collaboration is absolutely key. So I'd like to underline your point, Eric. Like, the more we work together, we don't have to solve the same problem 15 times. Like, hey, you've solved something really well. We're not going to reinvent the wheel. And I think that Sandra and team are doing a fantastic job actually underlining that. And I think there's a lady in the audience as well, Gail, who talks about standards and makes sure that there's a tried and tested mechanism of having standards that work that people can then build on top of. So I think when I look at mitigating risks in digital assets, like you've nailed most of them, but I would say also that a lot of it does, at least from a TradFi company, exit the digital asset risks that Tom's mentioned kind of look the same. Right, so you still have your cyber resilient frameworks, your disaster recovery, right? You still got your threat detection metrics, which you use whether you're in TradFi or whether you're in digital assets, and so your response plans and all those kind of things. Like we have that as standard, and I think that one of the differentiators of, say, Zodia custody when we offer our technology to banks is that we have a lot of the bank DNA infused on top of the vendors that we take underneath. So it's a holistic approach, and it is based on collaboration and partnership.
Wonderful, thank you. I think, well, our time is up, or we might have like a minute, but it's Monday morning. I don't know if anyone's had a chance to walk down the promenade or going to any other venues yet, but the feel I'm getting from Davos this year is it's pretty positive. There's a lot of excitement. Are we excited about 2025?
Yeah, absolutely.
Okay, good.
I mean, you can't be every year positive and stay in this space. So.
We've got to be right occasionally.
Every once in a while, we'll be right.
Exactly. Wonderful. Well, thank you so much to this amazing panel. Thank you to the audience, and I hope you enjoy the rest of the day. Thank you.
Thank you, guys.